In this lesson, I'm going to show you the key timeframes to use during technical analysis, as well as putting together Fibonacci, moving averages, trend analysis, market structure, support and resistance, candlesticks, and everything you've learned up until now in this course to put together a complete analysis system. Take a moment to read these disclaimers. We're going to start with timeframe analysis. Why do we use multiple timeframes? So I'm going to show you with a real trading example over here why you need to look at multiple timeframes. We normally use two timeframes depending on what type of trader we are. We have one bigger time frame and one lower time frame. Now you can use several timeframes, but for the purposes of this tutorial and the style of trading I'm going to teach, you will only need two. So right now we take our bigger time frame, which is going to be the 1 day, and our smaller time frame will be the 4-hour time frame. One big, one small. The bigger time frame tells me right now that this 50K level is extremely important. Psychologically, it's very important. We can see here it acts as a resistance, support, a resistance over here, -1 deviation over there. Now I am looking for this level to break and then the price to continue up afterwards. But I need a solid way of determining whether or not this 50K level over here is going to break. And it's hard to see when zoomed out like this. But let me show you what happens when we zoom in to the 4-hour. So now if I zoom into the 4-hour, I can actually analyze this move over here trying to break the 50K level. If we take our Fibonacci's, remember, we can see that the price went up and came down to the 0.5 level. And if you remember, the strongest trends, the strongest moves never come down further than the 0.382 level. So already I can see a weak move going into resistance. And I wouldn't have been able to see this on the higher time frame. Next, we take another Fibonacci. This move came down here and went back up. Again, we can see it come down to the 0.5. So now let's continue. You can see that this continues to come down. In fact, it came down to the 0.618. The price is really struggling over here, struggling to have a strong move into resistance. And now let's follow this. You can see price goes up and then actually crashes down over here. So now you can see the price went back up and we can analyze the next move over here. Price came down to the 382 just below. Now that looks good, but remember, we have 3 data points now. 2 of them indicating a weak trend, 1 of them indicating a stronger trend. I don't like this very much, especially because price is going sideways right after breaking a key level. If this level was actually properly broken, I would expect price to continue. And you can see after this, price fails to break the level. Now let me show you another example. We're going to zoom back out to the 1 day. Now this was a trap. This was a failed attempt to break a support, and we managed to spot it by going into a lower time frame. Now let's take a look at this next attempt to break the 50K level. We can already see 2 big bullish candles. Candlestick analysis looks great. Now we can see more candles coming in the level breaking. Now if we zoom in, we can get a lot more detail on what's happening over here. Take a look. We had 1 big move up and then down. Taking our Fibonacci's, that was a 0.236 retracement. Then this next move over here, it's barely retraced at all. You can barely even find a 0.236 retracement. This is an extremely strong move over here. Let's continue. Price is coming down a little bit. Hits the 0.236, bounces straight after it. In fact, this is an extremely bullish wick over here, pushing off strongly off of the 0.236 level. Now notice, we could only see this because we zoomed in to the 4-hour. Now it doesn't matter exactly what time frames you use, but I'm going to give you 3 options depending on what type of trader you want to be. Number 1, intraday. If you want to trade quickly, be in and out of trades within a day, you want to use the 1 hour and the 15-minute. If you want to be a day trader, that means most of your trades take 1 to 3 days, not too long. You're going to be using the 1 day and the 4-hour chart. And then finally, if you want to be a longer term trader, something closer to a swing trader, you're going to be using the 1 week and the 1 day. Most of my examples will be using the day trading timeframes of the 1 day and the 4-hour. Now finally, the moment we've all been waiting for, putting together everything we've learned for a step-by-step analysis process. Step 1, establish the trend. We're going to start by looking at market structure. We're going to use Bitcoin. For the market structure, I'll stick to the higher time frame, which is the 1 day in our case. We'll mark out the key levels that we want to be watching. You can see from these key levels over here that we had a clear uptrend over here, and then it peaked out, started to go sideways, and swapped into a downtrend when this key structural level and this key structural level broke. Next, for confirmation, let's get our moving averages onto the chart. And you can see that the moving averages agree with our analysis. Strong uptrend, started to go sideways. You can see these 2 moving averages getting closer together, and then completely reversed over here and started the downtrend. Next, we're going to use 2 more tools discretionarily. Fibonacci levels and candlestick patterns. We can use Fibonacci levels to determine the strength of different moves, especially key moves. We'll clean up the chart right now. Let's get the Fibonacci level. We'll take it from up here, the top of this move, our first lower high for a while, and take it down to the current bottom of this move. And what are the key levels that you can see over here? This 0.382 resistance right here at 40K. So also what I like to do at this moment is double click on the Fibonacci levels and get rid of everything else that I don't quite want to pay attention to right now. So this 382 level is going to be the most important one for me right now. What does this mean? That this is actually quite a strong move down until we reclaim the 0.382 level. As it stands right now, this does not look very good for the bulls. Finally, we're going to do some candlestick analysis. If we zoom in here and take a look, I can see that the bulls are really winning the war over here. This down move over here is extremely one-sided, but in this phase of the market, it's a little less one-sided. It's cooled down a little bit. The war is consolidating. It is not as aggressive in one direction or another. Congratulations, using just these 4 tools, you have now completed your trend analysis. The next important part of our process is going to be establishing key levels. We start with, of course, support and resistance. So what are the key levels we're paying attention to? Over here, we can see this 40K level, extremely important. Data point here, data point here, data point here. It's got a key structural level there and a key structural level there. It's also psychologically very significant. Down here, another support, very important, 30K, key structural level there, forming a key structural level here. Hasn't been broken for a long time either. Notice how this 40K level has been broken. This one has not been broken, so very strong. Now we'll mark a couple more key levels. Down here, I can see a minorly important structural level just above 20K. I like to keep this level in mind, especially in case this level here breaks. Now I'm going to pay attention to the next key level, which will be up here at around 50K. Notice the multiple data points supporting it. Strong resistance over here, support, small deviation, but it bounced afterwards, and as the price came down, it acted as a resistance there again, as well as a key psychological level. So that's finding the key support and resistance levels. Next, what are the key structural levels? Well, let's bring this here and this over here. You can see these 2 structural levels have just lined up with 40K and the 382. That makes this level even more significant. So let's change the color of this level. We can see 2 structural levels lining up over here. This is again increasing the significance of this level. Right now, this level has just become hyper important. Not only is it psychologically important, it's also the 382. It's also a key structural level. Similarly, down here, the 30K, you can see it lines up with 2 key structural levels. That's what makes this level so important, because we could actually take a support over here and make the argument that 32K is a support. Why? Because we can see a lot of wicks bouncing off of it, but that's an isolated argument. It doesn't have as many data points and it doesn't look as clean as the rest of what the chart presents us. Next, we have key psychological levels. We've already spoken about these: 30K, 40K, 50K, 60K, round numbers. Now, key Fibonacci levels and key moving average levels are the last 2 we're going to analyze. So the key Fibonacci levels over here, we've highlighted the 382 because that's where the moves bounced, but now we want to highlight key levels. Let's bring every single one back on. The 236, I'm analyzing this. I can see it act as a bit of a resistance over here, but I dislike the fact that it gets chopped up so much over here and there's no other data really supporting it. So immediately I'm going to get rid of that. Next, we have the 45K level over here, and I actually really like this level because if we come down to here, highlight it, we can see key structural level lining up, 0.5 lining up. So this is multiple different arguments lining up and making this level significant. So I want to leave that on my chart. I can also start to get rid of data and start cleaning this chart up. Next, the 618 over here. I don't actually love this level. So it's got a little bit of support with this key level over here, but I won't be paying that much attention to it, especially in terms of drawing a key level there, but I'll leave it up on the chart because it's significant. Then we have the 0.786 over here. Again, it gets chopped up quite a bit. I don't see strong data, so it's just going to be noise. I'll take that off the chart as well. Also taking off the rest of these because we now have a clearer picture. Final thing we're going to do is bring in the moving averages. Now, which levels do the moving averages support? This is extremely useful because you can see our 100 moving average is moving up to line up here, because when you look at these moving averages, remember they are lagging. So something you can do is predict where you think it's going to go. Yes, the level's here, but price is not going to do that, go up in a straight line. At least it's not probable that it does that. Sometimes it does, or smash down in a straight line aggressively. Normally, it moves in choppy motions up or choppy motions down. That means that this moving average is going to slowly follow along. So as long as the price stays down here, I expect this moving average to slowly trot along and eventually line up with this 382 level over here, making it very important. So now the most important level on this chart is this 382 level over here, because so many different arguments line up with it. The second most important level on this chart is the 30K level over here. Trend analyzed, key levels marked out. Now we're going to start establishing scenarios, how we think the market's going to play out. And these hypotheses are going to be the foundation of our trading systems that actually start making us money in the markets. There's 100 different ways to skin this cat, but as always, I'm going to make it so simple for everyone watching this video. Firstly, what are the conditions for a neutral case? So right now, I want to look at a neutral case, a neutral market. What's a neutral market? It's when it's going sideways. So what would have to happen for this to stay a sideways market? Well, first, I want to see this level over here hold. So if this level holds and we get a bounce, what would be a strong bounce? Because if this level holds, but we only bounce to like, say, here, then that doesn't support the neutral case because it probably is going to continue going downwards. So I need to think, how high do I need this to bounce for it to at least hold a neutral case? Well, price goes up to, say, this midpoint over here, maybe comes down, goes back up, starts going sideways, stays between 40K and 30K. That's my neutral case. Now, I am a trend trader. You'll learn more about trading styles later in this course. So I don't care too much about the neutral case, but I need to know when it is, because as long as it keeps bouncing between these levels, I don't need to trade. Now, what are the conditions for a bear case? Let's think of the bearish scenario. This is going to be a lot easier because all it needs to do is break this 30K level. That's it. Don't overcomplicate it. If it breaks this 30K level with conviction, if we can zoom in to say the 4-hour time frames, we take a look and this continues to go down and we can't at least claim on the 4-hour, this moving average here, this is the bear case. This right now looks terrible. As long as we stay below this 100 moving average on the 4-hour, I will assume the bear case is intact. So what are our conditions? I can set a simple one like this moving average over here, or you can set a different one for yourself. You could zoom into the 4-hour and be like, I like this key structural level over here. They're very similar. Whatever it is, you need to have your conditions. These are going to be mine for this. And finally, what are the conditions for our bull case? Over here, because the macro is bear, we need a significant shift to consider the bull case. The trend right now is going down. We're right next to our lowest key level. So this is the neutral case. My key level for us to go neutral again is 36K. My key condition for us to go bullish again is 40K. Until we break convincingly this 40K level, I'm not really going to turn bullish. So that's our analysis complete. Key bear condition, staying below the 4-hour 100 moving average. Key bullish condition, claiming the $40,000 level on the 1-day over here. Key neutral condition, claiming the $36,000 level on the 1-day over here. Now I'm going to show you the power of our analysis. Take a look at what happens in the market. We bounce off of this level over here, and we don't actually need to do any more analysis right now. We're just going to watch the price action unfold. We're bouncing, price is going up, it's testing this level here, no resistance, got above, and let's pause over here. We just smashed through the 36K. Look at the power and conviction at which our neutral condition was just claimed. And remember, we predicted the path of this moving average. It went exactly where we predicted it to go and acted as a resistance over there. So as you can see over here, we've claimed the 36K and our neutral condition has been validated. So now let's zoom into the 4-hour and take a look at what's happened exactly. Our bearish condition was invalidated. As we can see over here, we did not stay below this key moving average. And in fact, the second we broke above this, the entire trend reversed. Let's quickly analyze this move over here. We can see a 382 level retracement. So that's a very strong move leading straight into this 40K resistance. That 382 level also happens to line up with 36K. Let's move back to the 1-day. And all I've done is add one more level, this 382 that I'm going to pay attention to. Let's watch what happens next. Price goes up, it's testing this 40K level, still testing, struggling a little, and we got our first break. This is a 1-day claim of the 40K level. And just like that, our analysis has switched from completely bearish to completely bullish, and we've managed to watch the entire thing unfold non-stop. Now I'm just going to play out the price action, and you'll see without any further analysis how it interacts with our key levels, how everything we marked out hold up and play a significant role in this entire move. Notice how it interacts with the key levels that we set from ages ago over here. Hits it, hits a resistance there. Do you guys see the power of complete, concise analysis done with clear ideas and hypotheses that you adhere to? Every bounce, every move up, every key breakout adheres to one of the levels that we've marked out. Even when the price comes back down all the way here, after over a month, still abiding by every level that we marked out. The final point I'll make is at this point here, where the 50K level broke, we would have done a new analysis, a fresh analysis, marking out key levels with the price could have gone to as it went up there. You now have a complete analysis system good enough to make serious money in the markets. I'm going to give you complete templates on how to make your own trading system, checklists, stuff to write out, everything you need. And I'm going to share this in our free Telegram. There's a link in the description below to sign up. In the next lesson, I'm going to show you exactly how to use the specific trading platforms you'll need to start applying your trades. I'll show you how to manage your risk. I'm going to teach you in-depth trading psychology, which is essential to making money in the markets, fundamental analysis to go with your trading strategies, as well as a whole bunch more, from on-chain analytics to profit taking to exact trading strategies. So make sure to subscribe to the channel so you can get access to all of these videos. The final thing I want to leave you with in this conclusion is that remember, this is just a basic iteration of what I do. There are so many subtleties that tailor it to my personal style. As you gain experience, I want you to evolve this and make your own trading strategies. Take everything you learn, put it together, and build what works for you. In the next episode, I'm going to teach you how to use a trading platform, every intricacy you need to know about. Don't forget to sign up to our Telegram for written episode summaries, assignments, and extra reading material.